What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin, your ultimate source for breaking news and market analysis. The digital asset space is moving at lightning speed, and if you blink, you might just miss the next seismic shift. We've got a packed show today with updates that are set to redefine your understanding of the market. Get ready for insights that could shape your investment strategy and keep you ahead of the curve. You do not want to miss a second of this. Let's dive in. First up, we're talking about a potential game changer in how businesses interact with Bitcoin. Have you ever wondered how large corporations are quietly reshaping the very fundamentals of Bitcoin's market? We've got the inside scoop on an institutional supply squeeze that's making waves. Next, we're shifting gears to explore the future of high-yield crypto investing. Forget everything you thought you knew, because a new wave of innovation is here. We're diving deep into how two specific projects are not just participating, but actively redefining what's possible when it comes to generating impressive returns in the crypto space for 2025. This is one to watch. Then, we've got some crucial news directly impacting the legal and accounting landscape for Bitcoin. In a development that has investors buzzing, a significant lawsuit has been resolved. We'll break down the details of how a major player is ceding ground in a high-profile accounting standards battle, and what this means for the broader industry. And finally, we're heading to the heart of Asia, where a prestigious institution is making a bold move towards embracing digital assets. Get ready for this. A top business school is seriously considering accepting Bitcoin for tuition and donations. This could be a landmark moment for crypto adoption. Stick around for all these stories and more. Don't forget to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. Institutional power play, a hidden shift in Bitcoin's foundation. In a move that could dramatically alter the market's underlying mechanics, a significant institutional supply squeeze is reportedly reshaping Bitcoin's fundamental dynamics. This isn't just about price fluctuations. It's about the very availability of Bitcoin for large-scale adoption and investment. As more businesses integrate Bitcoin into their strategies, whether for treasury management, payment systems, or as a store of value, their demand is creating a noticeable pressure on the available supply. This phenomenon, often discussed in hushed tones within financial circles, suggests that a growing number of corporations are actively accumulating and holding Bitcoin, reducing the amount readily available on exchanges for trading. The implications are far-reaching, potentially leading to increased price stability or even upward pressure as demand outstrips supply. Analysts are closely watching how these corporate treasuries manage their digital assets, as their decisions have a ripple effect across the entire market. The increasing involvement of institutions signifies a maturing asset class, but it also brings new dynamics into play, where corporate actions can directly influence market fundamentals in ways previously unseen. The long-term impact of this institutional hoarding could be a key driver in Bitcoin's future price discovery and market adoption, making it a critical development for any serious investor to understand. But what happens when the legal battles surrounding Bitcoin's strategy conclude? We're about to find out. Hold on tight, because we're about to unpack a major legal development that could set new precedents. The future of yield, BlockDAG and Bitcoin Swift lead the charge in high-return crypto investing. Prepare to rethink your approach to high-yield crypto investments as two innovative projects, BlockDAG and Bitcoin Swift, BTC3, are poised to redefine what's possible in 2025. In a market constantly seeking the next big opportunity, these platforms are emerging with unique value propositions designed to deliver substantial returns. BlockDAG, with its novel directed acyclic graph technology, promises enhanced scalability and efficiency, potentially offering a faster and more cost-effective transaction experience compared to traditional blockchain models. Its architecture is built to support a growing ecosystem of decentralized applications, aiming to capture a significant share of the burgeoning DeFi and Web3 markets. Early indicators suggest a strong development roadmap and a growing community, positioning it as a potential frontrunner in the next wave of blockchain innovation. Meanwhile, Bitcoin Swift, BTC3, is making waves by focusing on bridging the gap between traditional finance and the digital asset world. potentially offering streamlined access to high-yield opportunities backed by robust collateralization mechanisms. Its strategy appears to be centered on creating secure, transparent, and high-yield investment vehicles that cater to both retail and institutional investors looking for predictable returns in the often volatile crypto space. The project's emphasis on security and regulatory compliance could be a key differentiator, attracting a wider audience wary of the risks associated with less regulated platforms. Together, these projects represent a forward-thinking approach to crypto investing, leveraging technological advancements and strategic market positioning to offer attractive yields. As we head into 2025, their developments will be crucial for anyone looking to maximize their returns in the evolving digital asset landscape, showcasing a blend of cutting-edge technology and sound financial strategy. But what happens when legal challenges meet accounting standards? Stay with us as we break down a significant legal outcome impacting Bitcoin's accounting battles. Legal victory. Investors drop lawsuit against MicroStrategy over Bitcoin accounting. In a significant development for corporate Bitcoin holdings, investors have voluntarily withdrawn a class action lawsuit against Michael Saylor's MicroStrategy concerning its Bitcoin accounting practices. The suit, which had accused the company of misleading investors about the financial impact of new accounting standards, was dismissed with prejudice, meaning it cannot be refiled in its current form. This legal victory for MicroStrategy comes after plaintiffs, represented by prominent law firms, decided to cease their claims. The core of the lawsuit revolved around MicroStrategy's handling of the Financial Accounting Standards Board's FASB Accounting Standards Update, ASU 2023-08. This update altered the way companies report unrealized gains and losses on digital asset holdings, including Bitcoin. The plaintiffs argued that MicroStrategy failed to adequately disclose how adopting this new standard would result in substantial reported unrealized losses on its significant Bitcoin treasury. Specifically, the lawsuit pointed to MicroStrategy's first quarter 2025 report, which showed nearly $6 billion in unrealized losses on its digital assets, coinciding with a roughly 12% price drop in Bitcoin during that period, the weakest first quarter performance for the cryptocurrency in nearly a decade. MicroStrategy's defense likely centered on the fact that these were unrealized losses and that the company was adhering to newly implemented accounting rules. The dismissal of the lawsuit is seen as a major win for MicroStrategy, reinforcing its unwavering commitment to its Bitcoin-centric strategy. It suggests that courts may be reluctant to penalize companies for changes in accounting regulations unless clear evidence of direct misrepresentation or fraud can be proven. This outcome could embolden other publicly traded companies holding large amounts of cryptocurrency to maintain their current strategies without the immediate threat of similar legal challenges. However, it also highlights the ongoing complexities and potential for confusion surrounding crypto accounting standards, underscoring the need for clearer regulatory frameworks to ensure investor protection and market transparency. The case serves as a crucial precedent, potentially shaping future litigation and corporate strategies in the digital asset space. But could educational institutions be the next frontier for crypto adoption? Get ready for a surprising move from one of Asia's top business schools. Pioneering education. Hong Kong University Business School eyes Bitcoin for tuition and donations. In a move that signals a significant step towards mainstream adoption, the University of Hong Kong's HKU Business School, renowned as Asia's top-ranked institution, is actively exploring the possibility of accepting Bitcoin and other digital assets for tuition fees and donations. Professor Hongbin Kai, the dean of the HKU Business School, announced at a recent CryptoFi forum that all technical details for such a system have been sorted out, expressing a strong desire for support for this innovative initiative. The school has confirmed to media outlets that it is indeed actively exploring the integration of digital currencies for payments, viewing it as a clear demonstration of its commitment to financial innovation and staying at the forefront of technological advancements. This forward-thinking approach aligns perfectly with Hong Kong's strategic ambition to establish itself as a leading global virtual asset hub. The Hong Kong Monetary Authority, HKMA, has been instrumental in this, recently launching a licensing regime for stablecoin issuers, which mandates strict compliance standards, including capital requirements, risk management, redemption rights, and robust anti-money laundering protocols. This regime, effective from August 1, with the first licenses anticipated in early 2026, sets a clear regulatory path for digital assets in the region. The announcement from HKU Business School comes at a time when prominent figures in the crypto space, like Binance founder Zhao Changpeng, have lauded Hong Kong's potential to rival major hubs like the US and the UAE, provided the government continues to act decisively. By considering Bitcoin payments, HKU Business School isn't just adopting a new payment method. It's embracing the future of finance, potentially setting a precedent for other educational institutions worldwide and further solidifying Hong Kong's position as a leader in the virtual asset economy. This initiative could significantly boost crypto adoption among students and alumni, creating a more integrated financial ecosystem within the university. And that brings us to the end of another packed episode. Let's do a quick recap of today's biggest stories. And that's a wrap on another explosive episode of Bitcoin Bulletin. We covered the institutional supply squeeze reshaping Bitcoin's market, explored how BlockDAG and Bitcoin Swift are redefining high-yield crypto investing for 2025, detailed the lawsuit dismissal against MicroStrategy in a major accounting standards battle, and saw a top Hong Kong business school considering Bitcoin for tuition. What a ride! If you found this information valuable, do us a huge favor. Smash that like button, subscribe to Bitcoin Bulletin for more in-depth analysis, and hit that notification bell so you're always the first to know. Also, follow us on all our social media channels for real-time updates and join the conversation. We'll see you in the next one.